Welcome everyone to the Kindle Report. Make sure I keep the sound on tonight. Thanks everybody for the 1,000+ likes in yesterday in spite of some of the technical difficulties. Well, folks, make sure you hit the like button. I want to keep those 1,000 likes up, so we'll be around on Sunday night. This is what we've been waiting for, the big meeting with Powell. And I think what you saw in the action today, especially in that last half hour, is nobody wanted to come in short with PCE prices coming out and with Powell speaking literally, I think at 10 o'clock is when he's going to be speaking. I mean, these guys hardly got together for 2 days to go all the way to Wyoming. I think they've been hanging out all week. But the point is that the central planners are going to tell us what things are going to look like going forward and what they've got planned for us. And hopefully we like it. And even if you don't, you know, as Claus would say, you'll own nothing and you'll be happy. So just take it to the bank on that. So let's talk a couple things about yesterday's action. We'll talk about some things that were released, what we saw in as we watched the action in the live room today. Just a couple things to bring things out. But we had all 11 sectors ended up positive today. S&P up 1.41, NASDAQ up 1.67, Russell up 1.52. So across the board was pretty bullish as far as that goes. So we're just looking at this big surge. Now there's a couple things technically I'm going to bring in that there could be a little bug in the ointment. We could get a rejection tomorrow, and I'll set that up here in a few minutes. But there's definitely some key levels we're going to have to watch for and remember the pattern that I talked about, I believe it was 2 nights ago, on the ABC pattern. I'll tie all this together here in a minute. So we look at yesterday. We got claims coming out. They were a little better than expected, 243. Continued claims are remaining under that 1.5 at 1.415. They were actually down as well. And the other number everybody was watching was GDP, right? So that revision came in a little stronger. It was 0.9. Now it's 0.6. So I think all of this stuff is just going to keep leaning to the narrative that things aren't that bad, and try to get this. We're not really in a recession, even though there's 2 negative quarters. You know the story. So let's go ahead and just talk a bit about the PCE prices. Looking at the core to come in, not the core to come in at plus 0.3, the headline to be at 0.1, and year over year 6.3 compared to 6.8 last month. So depending on how these numbers come out, the algos are already be geared up, I think, talking about the peak inflation numbers, all of that narrative that they've been able to play in the past. And I think that will come out in most of what we see tomorrow if the numbers come out that way. I suspect they will. The one thing that I would tell you with the GDP numbers that came out yesterday, the deflator came in a little hotter than what people thought. It came in at 8.9 versus 8.7, so it was up 0.2. So maybe the PCE comes in a little hotter. Maybe that means something. Maybe it doesn't. We saw once again where I've talked about the move in the treasuries, and no one cared that yields went up to almost 3.11, and they came back to 3.02 today. I don't think that yields even matter at the moment. I think that was a narrative. For whatever reason, the sell-off on Monday, they were able to basically call that one and get the algos to get the selling going. I still think it's the very likely that we're setting up a low in this pattern on the weeklies. I got a lot of stuff to go through the technicals. Should be able to get through tonight's video fairly efficiently, as it's all straightforward. We've been setting this up all week long, and today's rally just kind of played into that. Overnight, it's terrible. There's just no volatility or anything of the sort. So let's talk a little bit what Powell's likely to say tomorrow. And I think what he's going to be focused in on is that narrative about inflation, but depending on what kind of report we get, PCE, whether they can start to claim they're seeing some sort of peak, some kind of flattening. There's going to be something. Whatever he says, I don't think is going to be dovish, but I think it will be neutral. And I think neutral will be dovish and bullish. And I told you last night, no matter what the news comes out, bad news is good news is good news. So we've just got this underlying bid in this market. I know a lot of folks don't believe in it. Awful lot of folks still negative out there. And I think there's still a lot of consolidation that I talked about last night, and I'll continue that story tonight. But as far as the fundamentals go, you're going to see Powell set this up as good as he can, that everything they're starting to see positive moves from the standpoint of the inflation, but they have to stay the course. They have to beat inflation. They're going to keep that story out there, but I don't think anyone's really going to care about it. So let's go ahead and talk about the database. It's coming into Friday. I have a few things to comment on the weekly and the intermediate database. So let's take a look there. So we're, as I expected, we actually saw a slight uptick. Yesterday we were at 66.73 bullish. Today 67.13. There was 339 buy signals versus 93 sells. So we actually saw a positive rotation. I talked about this in the live room today, that was my expectation, to see a slight positive. And I think as I've been talking about for the last few nights, I don't see the short-term database dropping below 62%. So now, in case we get some huge volatile day, I'll set up here in a minute on the technicals where the extreme support is, where some of the triggers are that you want to watch for tomorrow. So, but as far as the database goes, on a short-term basis, it's good to go as far as that goes. So I've been telling you it's hard to get negative when you have over 60% of the database in trend mode. Okay, the only way we get a buy signal in these models is if we're identifying the beginning phases or that we are in trend. So this is very significant. I'll flop over to the bigger picture here. We're at 33.23% on the intermediate. This is going to be the big number. This is going to be everything that's going to drive the narrative for me on this channel as we go forward, which is going to be this. If we do get over the 42%, I don't think that happens based on the action we have had this week, unless we get some huge move tomorrow and we trade up into mid 42 handle. That's not my expectation, by the way, but if we do get that, maybe we get a real positive rotation. But what we're seeing in the database, I just want you folks to understand, is we're starting to see this movement toward more traction on the database and maintaining the 60% on the dailies. Every week that we go by, and we've been as high as, I believe, 84%, and now this is the low since we hit the 84, around the 67. So just expect to see a positive rotation. If we did get over 42%, that's going to trigger me into another mode, suggesting that the third quarter rally that I talked about going back into June, which we are getting to a large degree, is going to continue beyond maybe into Q4 even. So there's some significant things that could happen depending on what happens in the database. Doesn't have to happen this week. It's over the next couple of weeks. We've got a long weekend coming, weekend after this one. So we've got another week and the beginning of a new month and all of that to get through. So there's plenty that is moving toward keeping this database improving. And the reason why this is important, I just want to go on for just another minute. So if you're new to the channel, you don't understand, we're not just looking at indexes here. We're actually looking at 16,000, we'll call it 16,100 symbols, and looking at the trend mode on these, both from an intermediate, which those holding periods and what I'm talking about right now are typically 200 to 240 days, and those are market days. That's the better part of a year. So when we start to get a lot of traction, I remember back in July of 2020, and then again in November of 21, I was telling you all that, hey, we're getting big traction here on our database. This is not going to go away for a while. And of course, everybody told me, no, Bob, you don't understand. We're going to make a new low of 2020. We're going to take out the February, March lows, and that's, you're just wrong. Well, I'm telling you, when you're not just looking at indexes and trend lines and some real basic stuff, and you start to dig into the breadth of the market, I'm fortunate because all of these things that I'm looking at, I understand because I created all these models. So I understand what is the criteria. To you folks, it's a black box. It's fully transparent to me, and that's what I try to give you, that insight all the time. I wish I could trade the database, because I told you when we were up in the 74 handle plus that we would come back to 68 to around 62, and we got to 67 so far. There could still be further attrition, but what I'm trying to tell you here is that these are significant events, especially if we get above 40%. All of a sudden, now we're looking at 6,000, 7,000, 8,000 symbols. Half of the database, if you get up to that level, is telling us that there's going to be a potential for a holding period of 200 days, and the average returns are in the upper part of 25 to 35% on these trades we're talking about. So that is the forward-looking ideas of what's going on from a database viewpoint versus trying to do earnings and all that. This is a pure technical, quantitative viewpoint of the world. So let's go ahead and get into the technicals. Okay, first we'll get into the S&P, and it's kind of interesting what's going here on the dailies, because it would appear, and I know many of you have the indicators. If you haven't got them, the link to the indicators is up at the top. And just so you know, we are going to be opening up a community of all the traders that are using this on Discord and setting up some things. So make sure if you're to get signed up, or go to thekendallreport.com and give us your email so we can communicate to you. But the point of looking at this, the PPMs here on a daily basis, you see them fading. Matter of fact, PPM 1 is a minus 0.19, and that is negative. But we're looking at PPM 2 at a plus 0.14. And this is typical when we get into this type of configuration from the standpoint of the where the trend is, or lack of. 3 days ago, we got an exit on a trade that we had going on at 41.47. That trade came on at the 38 handle, came in at 38.78. It let that go. So we don't have an open position right now from a modeling standpoint. But what's really driving this, and I've been talking to you folks about this the last couple nights, is the weekly pattern that's setting up. And this is important to understand, is what's going on with the weeklies. And there is some, as I mentioned in the opening comments, the key elements to watch for. Just go ahead through the daily analysis. But here's the number to look at. If we look at the market grid for tomorrow, R1 20 42.13, 42.26. What I would watch for, I told you yesterday, watch the 41.81 level. We traded up to 87 early, and then at the end of the day, we got short covering, and we're able to close up at 4,200. Okay, so we got to close above there. You look at the market grid, and this pop up on the screen here, we have 41.89 is the 21 period moving average. We need to stay above that. But here's the thing that I want you to pay attention to, and is that 10 period moving average 42.21. Look at R2 42.26. That's going to be a key point tomorrow, especially off of the PCE numbers, or anytime that Powell is talking. If we trade up into this number, watch for a rejection around there. If we're able to trade through it, that will tell us that we're probably going to as high as maybe 39, going to mid 42 handle. Yesterday, we did trade right up to almost exactly to the RTX number. I thought we were going to get S1 R2 yesterday, which is 41.73. We took all that out. We got through R3. We actually traded through. I won't show you, but I will tell you that we got an RTX sell signal on the cash market, but we did not get it on the futures. And the RTX sells are not as reliable as the STX buys. And so we did get an STX buy a couple of days ago, and we managed to put in that little rounded bottom here on the patterns here. So let me just expand this out just so you can see this just a little better. But this pattern that's setting up here is very significant. So let me bring up the weekly and go into the analysis there. And this is what's driving my attitudes toward this market right now, which is this PPM1 is up 1.31. It's a vertical move underneath here. I talked about this last night. We're going to get a rising 10 pattern through the market grid, which is always bullish. That's going to start next week. We're at 40, 46. Actually, it probably, depending on how the market grid comes in, once we update at the end of the trade yesterday, we should be very close to that. But over the next 2 weeks, with this type of PPM reading at 1.31, that suggests that we're going to continue to see the market move up about 50 handles per week. So we should come in around 40.90. All of a sudden, the lows of this week is going to be where that value is lying, which tells us there's a substantial amount of support at that level. So if we do see that would be almost 100-point decline from here. But the key number right now is 40.80 to 40.46. So if we did get some crazy downside momentum activity off some of these reports or the Powell statements or whatever comes out tomorrow, I would tell you that would be your major support levels. And I would just use the grid. As those of you who have the market grid, just use that grid, and I just showed you here on the daily, but use that. But this upward momentum that is forming on the weekly is very substantial, and it's not going to go away. And the probabilities of declining below 40.46, and really that number is going to jump to around 40.90, close to 4100, are very low. So the lows that we set this week are going to be very significant as we come forward into next week. So this is important when you're starting to look at a trend. And like I said, just kind of relating everything back to the database that I just talked to you about. If we do start to get more positive rotation in the database, this is just telling you this weekly trend is still developing and it's not going away. And I remember, like I said, I'm flashing back to the 2020 when we started to see this literally in July through November. We were seeing this same type of action after a pretty big rotation to the downside. We saw the same thing. The database got, very, very negative, down to like 12, 14% bullish. So 9 out of 10 stocks we had no position in, nothing to do with it. And I'm still kind of tying together both the analysis of the technicals and what's going on in database. Then going back into June and July, we saw all the traction on the short-term models. And now if we get that follow through, this is going to be significant. And I will probably end up being crazy bullish just because these metrics are what drive me. At the moment, I still think there's some numbers that we need to watch. I laid that out. If you didn't see that video a couple of days ago where I laid out the Elliott pattern and the potential to go to the low 4,400, maybe a 45 handle, I still think that's kind of the top end of this. But if we start to get all these metrics, folks, I know I'm just going off here on this stuff, but if we start to get these metrics, that's going to be a very significant event. And I don't fade that database. I've been that's been in my life since 1996, effectively. So a very long time, and it's guided me through all the crazy markets over the past 35 plus years. So let's go ahead and get into the NASDAQ, and we should be able to get the rest of the video, but a lot of stuff's just coming up for me as I'm looking at these metrics, and I want to tie it together so that you folks understand where I'm coming from on these metrics, and that there's some substantial amount of evidence that's starting to emerge here that isn't going to go away very easily. Okay, so next we'll go through NASDAQ. NASDAQ had a pretty good day, and we're flat at the moment, down 950. This is the weekly chart, so we'll just start here. Same kind of numbers here. Look at this, 1.48. We still have a negative ppm 2, just like on the same on the S&P. But this is, that's the other thing. I suspect when we get the close for tomorrow and we get the update for next week, you're going to see that the PPMs are going to start to turn up here on PPM2. It's going to start to lose that downward momentum. And if these moving averages start to turn up, this is just kind of continuing saga. What I just talked about is then we're starting to see more significant trends emerge here. And this is likely not to go away soon. And we could end up setting up maybe a big, 0.618, maybe a bigger retracement of this decline. And I'll set that up as we get more evidence. But for now, you've got a good backdrop for that. Let's go over to the daily, just kind of set this up pretty quickly. Same patterns here on the PPMs. PPM 1 is at a negative 0.32, so it's trend mode down, 13,266. That's going to be the key point tomorrow to watch. Watch for a rejection from there. We may end up closing lower, maybe pulling back into the pattern. Just looking at the market grid, S1, 13,107. We've been 129 so far overnight. S2 would be 13,053. I think no matter what, we'll stay above the 13,000 level. 13,053 is S2. You can see even S3 is right there at 12,998. So I don't see us getting below those numbers if we pull back tomorrow. And that may happen. I didn't go through a lot of the analysis. I'm going to save some of this for Sunday night. But if, like I keep referencing back to the Elliott Wave video I did the other day, is that I was expecting an ABC pattern here at basically a sideways consolidation. And I think that's what we're seeing, depending on if we can get through those numbers. On the NASDAQ, it's 13,266. We need to close above that, and we need to see these PPMs turn up on a daily basis. And that will probably happen on Sunday or Monday, just looking at some of the numbers that are dropping off as we look back in the moving average history. So there are a lot of things that are pointing toward them at least flattening out, and especially the lows that we've seen this week being very significant, just as I talked about in the S&P. So the Russell, same pattern. We're minus 0.27 on the daily. The weeklies, the big pattern to watch on all of these. A lot of times I'll talk about when we're in the trends that the weekly trend is the driving force right now. Most of the dailies and the stuff that you're getting out of dailies, they're just noisy right now in that ABC correction in this sideways range. And this is where you're going to pick up elements of the trend. And the Russell is stronger, has a 1.63 PPM 1 on the weekly, which is even stronger than the others. And it also came in, I think, a week earlier on the buy at 1808. It's got a weekly buy, and we're trading here at 1963. I talked a bit about this yesterday, that we're probably going to get over the 2000 level and start to move up into some of these fib targets up here. There's a target at 1998. That's actually a pivot. If we get above 1998, then there's a lot more upside. But I don't expect to see that happen on Friday. So just same scenario on all of these indices as far as what they're set up. So weekly trends dominant, daily trends noisy, looks like a corrective phase after having this big move up, and doesn't look like they're set, because of the way that the weeklies are set up, that there's any huge disaster coming into the markets. Not that we can't pull back like on the S&P, that 40, 80, 40, 40, that's a big move. That's 150 points down. That would be a giant move. That is probable, but that would also represent a buying opportunity, not a place to get short. I don't expect that to happen. I expect this to stay in the S1, R2 range on all of these indices as we come in to Friday and the end of the week. Next market we'll cover is the 10-year. As I told you last night, I thought yields would come back in a little bit. PPM1 on the 10-year has actually rolled over, cut through its first derivative. It's still positive here, so we're trading right on support. 2.94, that could be a number we'll see on Friday. Don't see any real upside building here. In fact, I think they're about to stall at the moment. So we'll see what happens with all the news coming out tomorrow. The weekly charts still have that bullish, that mixed, I guess, picture, which is almost at the same point. We got 2.91 is the 10-week moving average, and it's negative by minus 0.72. And then at 2.92, same level, we've got this upward sloping 21-period moving average, which is up at 1.07. And typically what happens, we're going to get a crossover next week. And when that crossover typically will be when the 21 crosses over the 10, especially with the negative 10 pattern here on the PPM, that tends to be a signal of a pivot point and a top in the market. So that's what I'm expecting to see here. And we should see a lot of the momentum start to flatten off, and maybe we'll don't really have a lot of big downside. We'll see what sets up on Sunday night. But I think that 292 level is pretty solid at the moment. If we get down there, that's quite a move for tomorrow, depending on what the news is. And I don't see us getting above the weekly high right now, which was almost 313, 3.12. So we've established a range for the week, just a matter of where we're going to finish and how it looks once we get the new metrics and everything closes on Friday. So we'll stick with the weekly chart. We got crude oil. Crude oil had an interesting day. We did see some upside, traded all the way up almost to the 96 levels. 95.76 has been the high so far. This is a weekly graph. That 88.46 is going to be rock solid bottom. And the PPMs are starting to turn up. And in the live trading room, we had a little conversation how the oil stocks are starting to rotate back in. We're seeing them come in our modeling process. There was a ETF hack that I did that I've shown you folks before, that we're starting to get some traction where we're getting upwards of 50% traction on a lot of those stocks. We did see, just to bring in the oil stocks into this scenario, we did see that massive hit because everybody on the planet was long the first quarter of oil stocks. And now we just saw that huge rollover. We moved to, I think, about 12% invested, and just a couple issues that were left that managed to hang on. So we basically sold out of a lot of stuff very early into that downward cycle. Now we're seeing the opposite happen, and we're seeing on the crude oil, we're starting to see some positive PPM starting to turn up. And like I said, I don't see this big move. I went through the monthly charts last night. We're really just locked in these major ranges. Crude oil demand is not going anywhere. It's probably going to stay about as static as it is. And also the supply is there. And I believe, like I said, I don't think it's had that much of effect at all. I think we've just seen really some economic changes with some things softening in the economy, why we saw prices come down. So my expectation is that we'll just stay in an elevated range here for a while, but I think the oil stocks may come back into play. So keep an eye on that. And if we come into next week, I'll maybe try to bring up that ETF hack and show you folks in PortfolioXpert exactly what's going on there and where the rotation, what symbols are rotating in. That might be an interesting conversation to have. So we'll go to gold here. I'll stick with the weekly. I'll just do a quick coverage of the weekly. Like I mentioned last night, we're starting to see these PPMs trying to turn. We're just hovering right around the 200-week moving average. That number right now is 1744. Last trade, 1767. Looks like we're just hovering. We did have one close during this sequence of the last 2 months where we closed under that, but it rebounded right back into the averages. So we're just stuck here between the 200 at 1744, and we're going to call 1780 on the upside. With extremes, I don't see any way at the moment we're going to get to 1846 or anything that looks like that. Okay, the final market we'll cover is Bitcoin. Let's take and expand the scale out just a little bit. This is the weekly, just so you can see this pattern. And this is what I've been talking about for the past several, I don't know, weeks actually. You can see this rolling of the 200-week moving average through the pattern. We're hanging right around the 10-period moving average. It's starting to turn up pretty good at a 0.75. That value right now, 21,851. So we're trading right at it right now. But I think the best that you can think about here is this pattern. I'm going to draw something in here that I've been watching fairly closely from the standpoint of the larger pattern that could be setting up. And so I'll go ahead and draw this in here. So one of the things I teach a lot in the trading room is this pattern here, where we get this 1, 2, and then we get a move like this. And in fact, this is the indicator that you get with this is looking at that pattern and projecting prices out, which is, right now, crazy prices. But that also, if you just look at a couple things here, when you're looking at Bitcoin, if you came back into this range here, you're looking at maybe a 0.382 retracement of this big decline here. There's a lot of metrics that are come into play, but what we have to have happen to make this actually work is, I'll just draw in, we need this. The 10-period moving average is turning up, so I'm just going to draw in these arrows, and then this 21 is coming down here. And this will be somewhere, and probably this is close to maybe sometime in October or something. This will be where this pattern will be set up. We'll need to see these PPMs start to turn up as well across the board. If that happens, then we're going to get a very significant run in Bitcoin. And if there is correlation with the markets as far as what we've seen in the past, there hasn't been any correlation of recent. We've really just seen this stability in the market. So we haven't really responded, meaning the Bitcoin hasn't responded to movement in the equities and things that we've seen off of this low. A little bit, there's been a bias to the upside, but this pattern that's setting up is likely to be very significant, and but it's still ways away. And I'll cover it every night like I do, but I would be watching for the setup. We're probably potentially close to the low. I think we came up with a 20,000. I think the number was 20,800, something like that was a pretty big number. The low this week's 20,900. So watch for that number and look for that setup. So that looks like the pattern for me that is setting up pretty substantially. Okay, folks, this is going to be it for the video tonight. Appreciate it. Make sure you get 1,000 likes. Hit that like button. It's free. I just make sure you subscribe, hit the bell, all that kind of stuff. And good luck tomorrow with the markets. Like I said, I do expect to see a continuation of the third quarter rally. I'll probably be bringing up some longer term stuff as we come into next week and get to the end of August, which is just a few more trading days, just to bring up quarterly perspective and some other things to look at some of these longer term trends. That's where I picked up the rally for the third quarter rally was from the quarterly chart. So we'll go through that and start to focus in on some of these bigger pictures. And especially I'll be triggered if I get, some big numbers coming out of the intermediate database in the next couple of weeks. Anyway, folks, thanks again. And it's hard to believe another week has went by, but and it's good to be back, by the way, because it's funny because I got back a week ago, so it's good to be back and have a good week behind me and getting back in sync with the markets and with all of you. So thanks again. Hit the like button, keep the channel growing, tell your friends all the stuff, and get these indicators because there is like I said, there's going to be a community that we're putting together. We had a big discussion getting some moderators. We've got some people that have gotten very proficient in the indicators and our software, all that stuff. So we're going to bring this community a little better together. So that's my plan to build that out. So make sure you get these one-time fee, no subscriptions, all that stuff. Anyway, have a great weekend. Good luck tomorrow, and we'll see you Sunday night. Indicators are at kendallreport.com/indicators. That's funny, Stuart. Appreciate everybody all of you guys. You have no idea.